Good morning, I'm Christy Duffy for SmarTrend News. Today is Wednesday, July 7th, and this is your opening bell market update. U.S. stock futures are trading lower Wednesday as investors remain concerned about the pace of the global economic recovery. Euro area GDP increased by 0.2% in the first quarter of 2010 compared with the previous quarter and rose 0.6% year over year. And European investors are cautious ahead of a meeting of the European Central Bank, which is expected to keep interest rates unchanged as they look for details on the European Union's stress tests on banks. In corporate news, the Wall Street Journal is reporting that Microsoft is planning to lay off a small number of employees this week, while Tesla Motors may be in the spotlight after shares fell 16% on Tuesday, below their original offering price. Taking a look at market futures this morning, the Dow Jones Industrial Average trading 21 points below fair value, the S&P 500 futures trading about 2.5 points below fair value, and the Nasdaq Composite is trading 3 points below fair value. Now for a look at what's expected in the markets today, I'm going to turn to Andy Zamfotis from Lagarde Capital. Andy, what can we expect?
Well, yesterday we did talk about how the close would be more important than the open. The best I could say about yesterday's close was that it was pretty sloppy. I mean, the Dow was up almost about 170 points at one point. Then investors really took that opportunity to sell stocks. We were actually down on the day at one point, and then due to some last minute kind of buying, whatever, we closed up. The real issue is there's a lot of concern that's continuing about the economy starting to really cool off. And that's really what's feeding this. And today we have futures down this morning a little bit. Europe's off about 1%, and we had Asia off across the board last night. There was a good piece in today's journal about steel prices, how they're really starting to slump in June, and these production mills, they're cutting back, and it's just another sign that the end user demand for finished goods like cars and appliances just really isn't at a level where these production companies need to be to start hiring people and ramping up inventories. From a technical perspective, last week we talked about the death cross, which is when the 50-day moving average crosses below the 200-day moving average. That's happened right now in the S&P. Even though there's some mixed feelings about the predictive nature of that, there are a lot of people who do watch it, so it could become self-fulfilling at one point, especially when there's this much uncertainty out there. Today's pretty quiet on the news front. There really isn't much economic news due out today, so we're expecting to be in a little bit of a holding pattern for the most part. Maybe some slight drift downward as people get ready for earnings season, which starts next week.
All right, thanks so much, Andy. I'm Christy Duffy for SmarTrend News. For more news and market analysis throughout the day, make sure you're subscribed to our YouTube channel, Trade the Trend. You can also check for more headlines on our website. That's tradethetrend.com.